Welcome back. In this video, I'm going to be doing an update on US Bank. They announced their earnings last week, and I have some fresh financial data to update my valuation of US Bank. This is a bank that I've been investing in. In 2023, banks were sold off, and I thought the discounts on stocks were really attractive for a couple reasons. One, they pay a really high dividend. Two, they're really profitable. So profitable operations paying me a high dividend. I'll take it. So I started to look into banks and really arrived at a couple banks that I've been buying into. One of them is US Bank. Again, they announced their earnings so I could update my analysis on this bank and see if I want to buy more shares, hold the shares that I have, or sell my shares. Do me a favor and like my video and subscribe to my channel if you like videos like these where I analyze companies and share about my investing journey. Overall, I share about my portfolios and my mindset as I invest in companies and hold them to make a very good return over time. Now let's get into US Bank, my process, and my decision whether I'm going to buy more shares or sell my shares. So US Bank is not one of the big giant banks like JP Morgan or Bank of America or Wells Fargo. It's kind of a mid-sized bank, and they've been growing through acquisition. I like that they have a really good growth aspect to the bank. As you'll see in their income statement, they've been growing their overall revenues, which looks really good. And I also think that a mid-sized bank is going to be more efficient than the big giant banks, let's say a Wells Fargo. So I like that about a mid-sized bank. I like the story of US Bank. I think they're growing. They're really accumulating a lot of depositors and having their deposits at their disposal as we see higher interest rates rise. And those higher interest rates are going to then create more earning potential for US Bank. And the trick is for them to remain profitable, to remain very solvent. And I think all those things are there with this bank. So looking at their earnings release, let's take a look at a couple of important ratios. So one of the things that I measure in a bank is the book value. The book value of the bank has to keep growing, and that shows that the bank is adding value to the stockholders. And if you compare the third quarter of 23 with the third quarter of 22, it grew nicely, about 10%, actually about 7%. So that's a really good growth rate on book value. Interest income is there. We're seeing that the bank is nice and profitable, which is very good. They have been consistently profitable and generating good earnings per share. So that's really good. You see last year, really good earnings per share. This year, really good earnings per share. And their payout ratio, they probably pay out maybe around 55, 60% of their net income in the form of dividends. Yet they pay almost a 6.3% dividend. So those things look really good to me. Looking a little closer at the income statement, I wanted to point out, the growth rate in net interest income, it grew at 10.7%. Very good. Overall total net revenue went up 11%. Very good to have a top line growth. So I like that about it. Their income did go down. I think that they're having to pay a higher interest rate as well as earning a higher interest rate. But I think that's an area that I'll have to keep an eye on to make sure that the bank is controlling their expenses and maintaining that good profitability. I believe that US Bank is discounted by 60%. And what I mean by that is each share to me, it's worth $49, but the market's selling shares at $30.64. I get to the value that I believe the company or the bank is worth by looking at earnings per share and discounting that earnings per share to today's value using The next 4 quarters is the starting point, a PE of 11 and a growth rate of 4%. Those are all reasonable, I would say conservative factors that get me to a stock price of $32. So earnings per share method gives me a slight discount. The price to book and the PE value methods, they actually reveal a higher value of the bank and give me a discount of 87%. And those are really good factors, really good value differences between where I think the bank is worth and where they're trading. And they pay a really high dividend, 6.3% dividend on US Bank. Looking at where the stock is traded in 2023, it was trading around the valuation I have for the bank early in 2023, but we had the big bank scare. And I tend to look at companies, industries, sectors when there's a lot of fear, because fear creates great discounts. When people are just afraid, they just sell off things because, hey, I don't want to touch them because I'm afraid. Fundamentally, I think US Bank is a really solid bank. They're operating really well. They're profitable. So when it sold off like this, it really caught my attention. And I'm like, hey, I'd like to start buying into this bank. Pays a really nice dividend of 6.27%. And year to date, it's down quite a bit. But I make it a habit of picking things up that are a really good value proposition when they're discounted. And that's the case with US Bank. It offers a really nice upside of value, and it pays a good dividend. So should I put in more of my hard-earned money into US Bank and buy more shares, or should I just hold my shares, or should I sell my shares? Well, let's take a closer look. I like following the process and just sticking to that process and evaluating both US Bank as well as other banks along the same process. And, the first question is, do I understand the bank? Do I like the bank? Do I think they're going to be a really good bank the next 5 to 10 years? The answer is absolutely. I think they're a really good bank. I like what they're doing. They're growing. I think they're mid-sized, so they have more growth potential available. You look at the big giant banks, man, if they grow 2%, they're really happy, where US Bank is just, clicking at 10% growth rate, which is really good. The bank has a very good management team, so they're operated really well. Book value's growing, like seeing that. There's a nice discount on the stock just because it was sold off due to fear of the Silicon Valley Bank bankruptcy and related, banking fear. So I'm going to keep buying shares of US Bank and accumulating this bank. I really like this stock in my income portfolio because it drives a 6.3% dividend. I believe that I'm buying at a discount, and over time, I think this bank's going to rise in stock price. So it'll reward me 2 ways. I get paid an income, and then when it comes back, when the stock rises, it'll pay me a return. And at some point, I could sell it and make money on US Bank. Well, thanks for watching the video on US Bank. I hope you found it interesting. I'd love to hear comments from you on what you think about US Bank, and if you think it's a good investment, if there are other banks that you're buying into, and really comments around the banking industry overall. That'd be really interesting to read. Please comment and like my video and subscribe to my channel if you'd like to see more videos like these. And with that, let me wish you the best of success in investing in 2023. And let's get out of this bear market, which has been selling off for going on 3 months. It'd be nice to see the stock market rally. And I'm certainly crossing my fingers that happens. Thanks again for watching.